From the studios of Farm Journal Broadcast, this is U.S. Farm Report.
Welcome to U.S. Farm Report. I'm Tyne Morgan, and here's what we're working on for you over the next 60 minutes. Renegotiating NAFTA is no longer just talk. We have details and deadlines. Feed yards posting impressive gains.
Our industry is a roller coaster, and right now we're at the top.
But how long can it last? That's our Farm Journal report. Texas farmers are putting their money on cotton this year while pushing the envelope on production.
You can't keep doing the same thing the same way and expect different results.
We're on the road with Machinery Pete to the Texas Panhandle. And in John's world,
Medicaid and rural America.
U.S. Farm Report, brought to you by the dependable, long-lasting Chevy Silverado.
Now for the market-related news, all the talk around renegotiating NAFTA is now a reality, with the Trump administration officially launching into it with a 90-day comment period. U.S. Trade Representative Robert Lighthizer sending a letter to Congress Thursday, officially notifying Congress of the administration's intent to renegotiate the 23-year-old trade deal. Lighthizer calling NAFTA relatively successful up until this point, including for industries like agriculture and energy. But he says it's areas like manufacturing that could really use improvement.
Following the TPA timeline, the United States will be ready to pursue full negotiations with Canada and Mexico as soon as August 16, 2017.
Lighthizer says he hopes the new agreement will reflect the structure of the current agreement, but that the majority of the talks will be bilateral. Uncertainty around the Trump administration spilling over into the financial markets this week, with U.S. stocks falling the most since March. The U.S. dollar also seeing weakness, falling below the 100-week moving average and to levels it saw before the U.S. presidential election. Analysts say the markets may be worried that if an investigation is launched against President Trump, that it could stall the administration's stimulative tax and infrastructure agenda on which investors are banking. Now, some analysts say also adding pressure is speculation of Europe preparing to withdraw their own stimulus measures. News of more corruption in Brazil weighing heavily on the soybean market this week. Brazilian markets plummeted over allegations that their president knew of illegal bribes in their country. Now, Brazil's benchmark closed nearly 9% lower on Thursday, the largest daily decline since the 2008 financial crisis. Here's Joe Vaclavic from the CME.
Brazil is coming off a record soybean crop this past year, and farmers there have been gripping pretty tightly to those supplies. They didn't like the prices. Well, this collapse in the Brazilian currency, I think, may give them a chance to unload some beans, which are going to make their way into the export market. This sell-off in the Brazilian currency is also going to make things a little bit more attractive in Brazil to world buyers like China, and this is all going to be at the expense of the United States.
As Mother Nature eased up, planting progress making some major headway in the latest USDA crop progress report. As of Monday, USDA says 71% of the nation's corn crop is in the ground, 1 point ahead of the 5-year average. Now, the biggest gains, those came from the western corn belt. Iowa jumped 33 points in 1 week's time, with 85% of the crop now planted, and 32% of the nation's soybeans are planted, right on track with average. Now, the massive switch to cotton acres in the south, 33% of that crop is now planted. That's 4 points behind the 5-year average. Speaking of cotton, better demand is creating tightening stocks, driving up cotton futures to start off the week. Old crop cotton traded above 80 cents through Wednesday. National Cotton Council CEO Gary Adams says the recent price run could buy some acres, but most farmers are already set in their planting decisions.
I don't know that it's a major shift in terms of acreage, and I think, again, the thing we have to keep in mind is the fact that a lot of the fireworks in the market right now, or at least the price action that we're seeing, is on the old crop contracts. It's not on December, which is what producers are going to pay attention to, because that's the one that's most likely going to influence their pricing opportunities for the 2017 crop.
Adams expects old crop cotton shipments to continue on the strong pace, but expects sales to slow down. Those are the headlines. Meteorologist Mike Hoffman joins us now with weather. Mike, we did see some drying out across the eastern Corn Belt this week, as you mentioned last weekend, but what about next week?
There's going to be a couple of slow-moving systems moving across the country, so some areas are going to get some decent rain. Drought monitor down to very low levels for for really recent history, if you want to put it that way. Only the far southeast seeing some decent areas of drought. You can see a month ago it wasn't nearly as widespread, and it's been getting cut down ever since. Now, over the last week, it hasn't changed a whole lot. In fact, it's increased slightly in parts of Texas. We'll have to watch places like that. Let's go day by day this week. On Monday, storm system up in eastern Canada, cold front down along the east coast and Gulf Coast with showers and thunderstorms there. It dries out for a day or two across most of the Corn Belt. Another system kind of diving into the northern plains. By Wednesday then, double barrel systems in the eastern third of the country. Could be pretty wet in the eastern Ohio, eastern Tennessee valleys, southern Appalachians. Showers and thunderstorms surrounding that, but cooler air, drier air coming into the middle of the country. You can kind of see a stationary front could touch off some showers in the northwestern sections. By Friday then, a weaker system diving into the northern plains, the main system in the northeast. Those will be the two areas with showers and thunderstorms, but drier air once again, although fairly cool for this time of the year from the Tennessee Valley northward, but drier, as you can see, for most of the southeast and southern plains. Another system coming into the Pacific Northwest as well. Coming up in our next half hour, we'll have our longer range forecast.
Thanks, Mike. Well, from a slide in stocks to launching into renegotiations of a major trade deal, how could that continue to impact the market? Jim Bauer and Bob Utterback join me next.
U.S. Farm Report is brought to you by Kubota. Discover the power behind the M6 series at Kubota.com.
Welcome back to U.S. Farm Report. This week on the roundtable, we have Jim Bauer and Bob Utterback. Thank you for joining me this week. Let's launch into the stock market situation. We saw some weakness in the stock market over uncertainty regarding the Trump administration, weakness then on the U.S. dollar. You'd think that maybe that weakness could spill over into commodities, but has it so far, Bob?
It's one of those half glass, half full, half empty arguments. Depends on which way you want to take it. I think everybody's worried that Washington could degenerate into a kind of a paralysis. Everybody really wants the tax program to go through and reduction of taxes, which will stimulate the economy, and we still think that could happen. I think the weaker dollar is a positive for the exports, yes.
Even more on the exports? I mean, we've seen some impressive exports, so even more so?
It's a supporting factor.
Okay.
It helps support. I think the China swivel to basically not talking about trade and more about North Korea, that was supportive. So we got some things in the trade. But I think also a lot of people are worried about USDA's very aggressive export projections with South American crop being so big.
Right.
Can we get to those higher export numbers? And the weaker dollar, I guess, supports the argument.
Well, at the same time, we're seeing weakness in the real, and you mentioned South America, but the scandal going on in South America, it put some real heavy pressure on the soybean market later in the week. Does that continue, or do you think it was just kind of a short-term knee-jerk reaction?
Well, I think Brazil has had issues for centuries. If you visit Brazil, you know that it's a country of the future. It's got a lot going for it, but there's always been an element of corruption. Mm-hmm. If you want something done, you got to kind of look to maybe do it under the table. A lot of issues there from a confrontational standpoint between the socioeconomic facets of the country compared to the rich versus the wealth versus the poor. But I'm not totally surprised that this issue has come about, but I think Brazil will, over time, rectify that whole situation. Okay. I think the weakening real also offered some opportunities for their soybean traders to price some stuff. But again, I know it doesn't sound normal, but in a certain sense, it is the normal way they do business.
Then why did we see so much pressure on the soybean market? Is it because the trade thought that we would see just this rush of South American soybeans onto the export market, or really?
I think Thursday's action was a surprise to everybody. I think the bear, I'm kind of mitigating on one time, but I was expecting more weakness next week than this week. And I think yesterday kind of caught everybody off guard. Okay. And so it hit stops, and then it ran, and the funds ran it down. Now the question as we start looking is what happened to open interest? Were the funds use this correction yesterday to liquidate their big short position? If they did, that's a very positive sign for a reversal. If they added to, which I don't think they did, then it really doesn't mean as much. So if they did use it and liquidate it, that's a very positive to start turning the tide.
Well, in use with what Bob is saying, I travel quite a bit. I've been in various large-scale cities and some smaller towns. I just came from Sheridan, Wyoming, and Billings, Montana. I see continual large-scale growth, much more so than I've originally thought. But every place I go, I see major large-scale infrastructure projects. And I think this administration is very much oriented towards that. So I'm kind of in the camp that, yeah, we're going to have corrections. We have analysis paralysis sometimes because there's so many things going on that you can't hardly decide what's right and what's wrong. But I think in general, things are pretty good and going to get better actually down the road.
But, you know, this week we did see the administration officially launch into renegotiations, sending that letter to Congress about NAFTA. You know, and when we see that, Lighthizer admitted this has been a really good deal for agriculture. So do you think with that we have some more uncertainty that then just explodes in the market, or that's kind of already priced in at this point?
I think it's still yet to be determined. And if you have farmers having big inventory in their hands, and we have trend line plus corn yields this year, and the dollar strengthens, and then all of a sudden the trade becomes a problem, that could be the formula for the Black Friday this fall. So I think it does put some risk on it, but I would say long term, I don't think they're going to mess around with agriculture too much. I don't think they want to. There's other issues. They want to keep agriculture where it's at and improve other areas.
Like manufacturing.
Yeah.
So, but also speaking of trade, China, what should we be watching with China?
Well, I always say do what China does, not what they say. They are the greatest traders on the planet. They really, in my opinion, do a great job of analyzing what value is. They're great value seekers. But we're going to have to watch China. They've been coming back in the market from a demand standpoint. And of course, that is a huge, huge consumer base for them. And I think what's going to happen here, we've seen them come into the natural gas market. We've seen them come into the beef market, which I think is really a sign that their people want more protein. So from a demand standpoint, that's not going to go away very fast. But the one thing about China we're going to have to watch is Northeast China, where they're having a weather issue, and as long as they get precip in the next several weeks, they're okay. But that Northeast China needs to be watched because it's been very hot and dry there.
Well, here, hot and dry, I mean, we've seen a lot of wetness and a lot of rain. Some farmers frustrated about replanting. So what impact could that have on the market moving forward, if any? We'll ask Bob when we come back on U.S. Farm Report.
Help a community organization win $10,000. Vote now by texting DREAM to 31313.
Welcome back. Well, Mother Nature showed her fangs again this week. We saw snow in Wyoming, Nebraska, some heavy rains across the Corn Belt. Hearing from some producers who may have to replant again. Frustrated that the market has not responded. Do you think the market will respond?
I think we're in the time period where the best chances from late May through second week of July. It's in the prime time when things are set up. We got the weather adversity. We could affect the crop. Now, if you start affecting the corn yields below 166, 165, I'm about 167, 168 right now. Well, I'd like to, and not going lower than that. But if we start heading too much below 166, then I think the market will respond. If you get down to 162, which some people in the trade would suggest, that would be extremely bullish for corn. But at the same time, it's not going to affect the bean yields. And I think this is a year where long corn, short beans is going to be kind of the dominant play for a lot of players. So yes, I think this is time for bears to go to sleep, hold your money, reduce your position, reduce your risk for about 4 to 5 weeks, but be ready out with your claws about the last week of June, 1st of July, be ready to take the bulls on. But for the next 4 or 5 weeks, be cautious.
So you don't think it's very likely we could have a huge summer rally?
No, I'm hoping we have a summer rally. I want a summer rally, passionately.
I've known Bob for 40 years, and I know he's a bear. This almost sounds exciting to me. He's starting to really get my interest now.
So what do you think? What does this summer potentially hold?
I'm a little bit like Bob. I think we're going to approach a critical time frame. Driving up here, I looked at some fields from Indianapolis to South Bend that are going to be replanted if we get any more precip. I think the northern western Corn Belt are, as advertised, pretty good shape, but boy, there are some fields in this eastern and east central Corn Belt that are in really bad shape. And I'm like Bob, I think we're already starting to potentially drop below trend line if this situation. We're getting close because these fields are super saturated. There's a lot of replant. There's a tremendous demand for corn seed that wasn't there just a couple of weeks ago. It's getting, like I say, it's getting a little bit more exciting now.
But the negative is the South Americans haven't got, they're holding too much inventory on price, and there's farmers selling a whole lot of corn on price. So the producer has got inventory to sell. So, and the key is if we get this summer rally, about the time about 410, 415 December corn, I'll tell you technically, if we take that out, everybody will get so bullish, and that's what you need to be selling it rather than buying it. So if you're going to buy it now. Don't buy it at 410, 415.
So Jim, we know there's a lot of old crop corn out there. What is your advice for those producers that are just sitting on last year's crop?
Well, watch the spreads. If the spreads are tightening, be a little bit more optimistic. If the spreads are widening, be a little bit more negative. But I think the market's kind of coiling here for the next couple of weeks, and I think we're getting ready to make maybe a 30, 40 cent move up or a 30, 40 cent move down, depending upon what actually happens weather-wise.
Just in corn.
Just in corn. But now here's another element that I want people to kind of watch. Some of the sleeper markets, the quiet markets that nobody's really watching as close as corn and beans. If you look at the market action in rice, constructive technically, wheat looks to me like it's trying to make a major bottom. Oats, it's got some support underneath it.
Yeah.
Commodities like cocoa are starting to get a demand factor. Demand in this type of market is more important than we think, so we don't want to forget about that.
Bob, you agree with that?
Yeah, structurally, I think but don't take it too far.
Okay.
You know, usually if I give the bull an inch, he wants to take a mile. And
See, he's backing off on me now.
I want to take advantage of this rally, so I want to be long for the next 3 to 4 or 5 weeks, but don't go overboard in your optimism.
He was quick to throw you under the bus, Jim.
Never go overboard on optimism if you're a commodity trader, because that's when you get into big trouble.
All right, we need to get their closing thoughts, so we'll take a short break, and then we'll be back on U.S. Farm Report for that. Welcome back to U.S. Farm Report. Time now for closing thoughts. Let's start with you, Bob.
We got a time period where we can rally, but I implore people now to move their old crop corn in an orderly manner. Time is important. Basis will become very, very bad if we do not get this weather scare. So I think you got to put the calendar on, say, the 3rd week of June to the 2nd week of July. You've got to have a game plan for getting rid of this year's crop and Florida next year's crop.
All right, Jim.
Well, I'm somewhat similar to Bob. You got to be prepared. You know, be prepared for some market activity and action. It may surprise us. I'm still concerned about the Eastern Corn Belt. I think there's an issue there that's going to have to be rectified pretty quickly. But basically, I'll go back to what I like: marketing through sell and defend strategies. Sell the cash and defend it with some type of strategy that fits the risk parameter of the client. But as you know, we very rarely buy options at Power Trade. We're always, in almost 95% of the time, trying to sell the option to grab the premium.
All right. Thank you both for being here. We really appreciate it. Stay with us. John Phipps joins us next. Well, as our family grows older, some of us are faced with making tough decisions, including placing a loved one in a nursing home, like my family recently had to do. But how does this decision tie into politics? Here's John Phipps.
Well, we've got a chance to get back in the field, so just a quick John's World this week. Our tiny town of Chrisman is fortunate to have an exceptional nursing home, Pleasant Meadows. With about 100 residents, it touches the lives of virtually everyone in our community. It is by far the largest employer, with nearly 150 on the payroll and dozens more health contractors like occupational therapists. I've had aunts and uncles, cousins, scores of neighbors, and generations of church family cared for there. Having a facility this close is an abiding comfort to our aging community. We have even prayed in church for an opening at the nursing home for a loved parishioner in need of care, although a few of us uncomfortably later realized how such openings usually come about. With all the debate about government and health care, one fact seems to have flown under the radar. Medicaid is the single largest source of long-term care funding in our country. I've noticed that debate over cutting Medicaid tends to center on poor adults, but this is too narrow a focus. Medicaid is the reason we have a high-quality facility like this in Chrisman, and before we take an axe to this enormous entitlement, we might want to have just a few more facts. Next week, I'll start an Ag-splainer about Medicaid and rural America that might help inform your opinions about what we are doing wrong on health care policy and how we should work to make it better. But for now, I suggest this rule of thumb. All arguments about government involvement in health care play out differently in rural America compared to our urban counterparts. If we don't pay attention, the resolution of this rancorous debate could endanger the already fragile rural medical infrastructure.
Thanks, John. Well, still to come, it may look like paradise in the cattle markets today with prices, but the industry is still trying to replenish what was lost during the steep losses in 2015. That's our Farm Journal report after the break.
From the studios of Farm Journal Broadcast, this is U.S. Farm Report.
Welcome back to U.S. Farm Report this weekend. We have much more ahead. It's a feed yard frenzy, but how long can the strong profits last? The push to plant more cotton is helping bolster other equipment sales. We're on the road to Texas this week. And are there too many townships in the land of Lincoln? That's customer support. Now for the headlines, Ag Secretary Sonny Perdue making his first appearance in front of the House Ag Committee this week, defending his reorganization of USDA, as well as suggesting some fine-tuning of the crop insurance portion of the Farm Bill. During questioning on Wednesday, the Ag Secretary says it's not a reorg of USDA, but more of a realignment with an even larger focus on rural development. He defended his decision by saying there will be no change in the mission of FSA, NRCS, or RMA. When asked about the crop insurance portion of the current Farm Bill, the Secretary said overall the program works, but knows it isn't perfect, including looking at the redesignation of cotton and adding specialty crops into the mix.
We don't want to create a program where our producers are farming for the program, and that happened in the past, and that creates some unnatural market forces that we don't want to have happen. So we want a true safety net for those who are doing right. And we don't want people farming for insurance payments either. We want them legitimately, but the insurance ought to be utilized when there is a true revenue loss to that producer, be it be price or be it be production.
Well, Ag Bankers' thoughts on the rural economy rising to its highest level since July of 2015. The latest Rural Main Street Index climbing to just over 50. That's up from the 44.6 in April. RMI author Ernie Goss says stabilizing and slightly improving farm commodity prices help push the index to just slightly over growth neutral. Yet 86% of those surveyed still think low commodity prices are the greatest threat to the rural economy. It's the current economic headwinds that's just one barrier to farmers adopting more ag technology. Rabobank releasing a report this week called Bungle in the Ag Tech Jungle. Author Ken Zuckerberg telling me $7 billion of outside money poured into the ag tech sector since 2014. But 5 main barriers, including lack of broadband, falling net farm income, and no universal operating platforms, are just 3 of those obstacles for ag tech companies today.
What we see today are a lot of excellent ideas, whether they be machine data, artificial intelligence, farm management software. We see a lot of different parts of the ecosystem coming out. What we don't see is a uniform operating platform to which data insights can be gathered and then delivered back to the farming community.
He says the ROI for data, software, and predictive analytics just isn't there yet in U.S. digital ag. All right, that's it for the news. Meteorologist Mike Hoffman joins us now with the national forecast. Mike, dryness is spreading across the high plains, Texas, and the southeast in the latest drought monitor.
Thanks, Tyne. Yeah, there are some areas we still have to be concerned about, mainly in the south, but you can see as we head through the rest of this weekend and into early parts of the week, another storm system, another cutoff low in the upper atmosphere, kind of a strange pattern that we've had. That sits over the Great Lakes for the middle of the week. That brings a shot of chillier air into the eastern 2/3 of the country, all the way down toward the Gulf Coast. But then it kind of flattens out, so I think we have a day or two shot there, and then things turn a little bit closer to normal for areas from the Ohio Valley, Central Plains westward, but still pretty chilly upper Great Lakes, and that'll linger into the holiday weekend as well, especially Great Lakes into the northeast. All right, 30-day outlook for temperatures. I'm going below normal, Central Plains into Wyoming and some of the other portions of the Rockies there, above normal in the southeast, mid-Atlantic, and above normal in the northwest. Precipitation over the next 30 days. Lots of the Corn Belt, I'm going pretty close to normal. It's a tough call, obviously, but above normal Arkansas, northern Texas, all the way up into the northeastern Rockies, and below normal Washington down to northern portions of California. Tyne?
Thanks, Mike. Well, feed yard margins seen a complete 180 in just 18 months, with operators referring to the business as a roller coaster ride. But even with strong margins, feed yards are still in recovery mode from 2015. And that's this week's Farm Journal report.
Substantially better.
For Hartley, Texas feed yard operator Ryan Morehouse, 2017 is off to a good start.
Our industry is a roller coaster, and right now we're at the top. I think when you were here before, we were at the bottom. So we'll just take advantage of it and try to regain some of the equity we lost back then.
Last time we visited in 2015, the picture wasn't as green. Sterling Profit Tracker showed in October of 2015, feed yards were losing an average of $500 per head. And while it may not look much different, cattle were fed to heavier weights, just adding to the pain. Today, it's a complete 180. Sterling Profit Tracker showing for the week ending May 12th, feed yards saw $536 per head gains, and with more attractive prices, these feed yards are packed with lighter carcass weights as cattle are pulled up greener.
I think the whole industry is. The basis has been outstanding for hedgers, and therefore it incents feeders to pull their cattle forward and sell them sooner.
While today's profits look good on paper, Morehouse says that's not the case for everyone.
I think people still making good money in the cattle feeding, but it's not just a cash to cash, because for the most part people hedge the margin in them because they've had such a rough time before, and so we're giving a lot of that back. But I think in the end it'll be a great year for cattle feeding.
But with cash cattle prices leading the way, the basis has been good.
We're experiencing fantastic basis right now. The cash market, has been really good. However, when you compare the cash market to futures, we're considerably higher from a cash standpoint than we are in futures.
Dreyer says if boxed beef remains on this impressive run, he's concerned beef will price itself out of the market again.
Going forward, the question will be, will cash come down to futures or vice versa?
But the other factor Dreyer is concerned about is outside money.
The funds have a massive long position in live cattle right now. And I mean, really their position is as big as it was back when we were at 170. So with that massive long position, the next question is, when will they decide to reduce that position?
But Dreyer says while many are questioning how high these cattle prices can go, he wants producers to be ready if and when the market flips.
As we came out of 2015, a lot of producers said, I'm never going to have that problem again. I'm going to manage that risk. Well, we're in one of those times when it's very easy to say, hey, the market's up every day and I'm enjoying it. Well, that's great. However, there's still a tremendous amount of risk.
For now, Morehouse is looking down the road.
It's always a challenge, not a boring day very often.
Knowing it's always a bumpy ride.
Anytime you're a margin operator, you're going to get big swings. And it seems like the market's a little more volatile these days than in the past. You can't let it pull on you too hard, because if you do, you won't stay in the business very long.
But he's buckling up and ready for the wild ride of 2017, because if cattle prices continue on this path, it could be his best year yet. Morehouse says they saw about a foot of snow 2 weeks ago, but it wasn't a disaster since he didn't experience a freak blizzard like his counterparts saw in Kansas. Up next, John Phipps. Well, John received a question this week about his home state. John?
Loyal viewer Marty Whitting from Leaf River, Illinois, touches on an Illinois problem with national implications. Less than 22% of the eligible voters turned out for the last election April 4th in my county of Ogle County. That is disgusting. Some uncontested positions had over 20% undervotes. I think that much undervoting shows disgust with the status quo. There are over 9,000 agencies in Illinois. That's more than Texas or California, and each other state has more population and more landmass than Illinois. That raises the question, do we have too many agencies? Well, Marty, the short answer is yes, indeedy, we do. Some explanation for people outside the land of Lincoln here. All but the blue counties in Illinois are divided into townships. Townships are enabled by our 1848 Constitution to do three things: assess property, maintain local roads, and provide general assistance to the poor. This is done by electing 4 township board members, a supervisor, and usually a road commissioner. In addition, Illinois has drainage districts, library boards, fire protection districts, cemetery and school boards, and other units of government, each requiring personnel and a line on your property tax bill. Now, this made sense when our state was 30 years old and farms were 80 acres. Local control provided services more responsively. But it's almost 300 years since we became a state, and our 8 million citizens live overwhelmingly in cities. It's time to get rid of our 1,431 townships. But efforts continually run into the considerable clout of the Township Officials Association, which, as Marty points out, by their numbers alone constitute a considerable portion of the tiny number of actual voters. Government designed for a different era leaves many of us with a recruiting problem and inefficient services, not to mention bloated tax bills. That's one big reason I don't automatically think local control is better than county or state jurisdiction. And if you watch carefully, many of those so-called burdensome regulations farmers complain about originate with their neighbors on local boards. Too much government can begin at the bottom, not just the top.
Thanks, John. And if you have questions or comments, just let John know by email at mailbag@usfarmreport.com, or you can also send us a message on Facebook or Twitter. Up next, we're on the road with Machine Repeat to see how the massive shift to cotton acres in Texas is bolstering demand for other equipment as well.
On the Road with Machine Repeat is brought to you by John Deere. Nothing runs like a deer.
USDA's planting intentions report in March showed cotton acres are expected to shoot up this year to 12.2 million acres, with more than half of that planted in Texas alone. So how is that push toward the fabric of our lives bolstering buys of other machines as well? We're on the road with Machine Repeat to Dalhart, Texas to find out. Weathering Mother Nature in the Texas Panhandle can be area farmers' biggest obstacle.
Last week we had 8 inches of snow on the ground, and a week later we're planting. It's amazing.
But this year, these farmers aren't plagued by drought.
We're in good shape.
The latest drought monitor showing the Texas and Oklahoma panhandles are drought-free for the first time in nearly a decade. It's that moisture that's made planting a challenge at times this year.
If all of our planters in the field in one day, we could probably cover 2,500 acres a day.
Being able to cover that many acres helps them play catch-up quickly. And this year, crop mixes are changing.
Cotton's king right now.
With old crop cotton trading above 80 cents, the Howards are ensuring the crop gets off to a good start.
Getting the cotton in by the 10th of May is our main priority.
Once upon a time, you'd think we'd have cotton up here because it's so cold, but genetics have come to us, so cotton's very viable here. It does very well.
For Green Country, they service more than just cotton acres.
Livestock crop, there's a lot of corn. This year there's a lot of cotton, some wheat, some seed milo.
But with talks of cotton acreage doubling in this area alone, that shift is what's helping the resurgence in equipment sales.
I'd say sprayers have been our biggest surprise. Very clean on our sprayer inventory. We're actually buying a few sprayers right now to sell. It's still a result of the cotton crop because cotton has to be sprayed so often. But
Machine Repeat says sales of sprayers continue to impress him, but it's a similar story with quality machines.
Good used equipment has been in demand since end of 16. And I've been surprised at some of the prices we've been seeing on late model large stuff.
One factor becoming even more important to buyers, warranties.
On the sale bills, it used to be mentioned kind of at the end on an item. Here's a 1 or 2 year old tractor combine. Oh, we got warranty. Now you put that up front. We got warranty on this thing. And as sales of new have been slower the last few years, to get that piece of used equipment with warranty for another year or two is huge.
With our customers anymore, it's almost a deal breaker for them. Without the warranty, it just is a lot harder to sell the tractors.
Gustin says they have one customer who trades in more than 60 tractors every year. But with the comprehensive warranty still intact, it's helping to ease the load on lots.
Still a great market for them. We have more of them we'd like to see, but the tractors are moving, not just in our area, but we're shipping them elsewhere, send a few into Canada.
But more than just finding equipment that runs, the Howards say they invest in whatever adds efficiency to their farm.
Every purchase usually brings some sort of labor efficiency because in this part of Texas, labor's an issue.
And today, that often comes in the form of technology.
I'm learning the difference between technology and applied technology.
It's ensuring that technology adds to farmers' bottom line that Green Country says is still a focus.
I think some farmers are overloaded with information. I think some of the farmers are too overloaded because they, it's all coming in, but just trying to figure out what to do with it to make them more money.
Even for early adopters like the Howards, it can be hard to put all their confidence behind the technology at first.
I remember the first time I pulled in the field in a planter without any markers, and I'm thinking next time I turn around, where am I going to go here? But it works, and it changed the world of agriculture for us.
The Howards say from turning out 4-bale cotton to 300 bushels per acre on their corn crop, pushing the envelope is paying off.
You can't keep doing the same thing the same way and expect different results, so we got to be looking for the next step.
The next step may still be unknown, but today's focus is producing even bigger yields and better profits.
I guess we're all driven by the desire to excel in what we do. We're passionate about farming. We like it. We want to see what we can accomplish.
There's a lot of tools out there that even 10 years ago they weren't available. So even though corn's $3.50, you can still squeeze over $4 out if you hit it at the right time.
For these farmers, while the dark clouds of lower crop prices still hang over their heads, 2017 is off to a solid start.
A little brighter outlook for most of our farmers. Even with the low prices, I think the optimism's still there.
And that optimism is helping them also focus on a strong finish to 2017. That was a fun trip. Our thanks to Green Country for hosting us last week. And next month, the Machinery Pete and I are off to McPherson, Kansas. Well, next up, Machinery Pete rejoins us for Tractor Tales.
Welcome back to Tractor Tales, folks. This week we're headed to northern Missouri and we're going to share with you a 1930 United. David Maddox did his best to get this one started for us, but this classic Allis-Chalmers was a little shy the day we arrived. Even though it wouldn't start, this beauty had plenty of features to show off.
Allis-Chalmers started building this tractor in 1929. According to the serial number, this was the first one built in 1930, the second year. The United Company was formed by several little companies that got together, and they decided they seen a good market for a utility tractor still. So they went to Allis-Chalmers to ask them if they'd build it, and Allis-Chalmers did, with the agreement that they would also be able to build one with their name on it. So this is the United, has the United name on the front. The Allis-Chalmers tractor that they built had Allis-Chalmers across the front. I've got enough parts to build at least one of the Allis-Chalmers tractors down the road, so hopefully one of these days I'll be able to have a pair of them to show. A friend of mine located it out in eastern Colorado. He called me one day and said, I found a tractor I think you might be interested in. When I restored this tractor, the fan belt was in bad shape. I got to talking to a friend of mine up in Iowa, told him I was going to have to buy one of these reproduction fan belts, and I thought, I'd rather have something that looks a little better than those. And he says, well, go home and check your book, see what that part number is. I bought out an old Allis-Chalmers dealership, and I think I may have a new old stock fan belt hanging on the wall. So I called him, told him what the number was. Sure enough, he had it. And so I've got that new fan belt on here, and it has Allis-Chalmers in orange letters down the side of the fan belt. And then another item I think is kind of unique. This is the way the oil pressure gauge originally was screwed on down here at the block. And the farmer that used this tractor put this pipe on here to get it up closer to the hole in the dash where he could see it easier. And I thought, that looks pretty good, so I'm just going to leave it just the way he did it there. I'm at the point now where I'm going to have to slow down because I've run out of room to store everything.
Thanks for that. Well, today's Country Church salute goes to the Sterling Church located in Blue Earth County, Minnesota. The congregation is celebrating its 150th anniversary this year. They tell me even though the church was built in 1867, it's been the entire community helping with upkeep over the years. Our thanks to Amber Lee Ward for sharing their story. Stay with us. We have some From the Farm photos next. Welcome back. Well, Mike, when we talk about dust storms, we usually talk about them happening in the Southwest, right? But how often do you talk about one in central Illinois? Check out these pictures from Melissa with all the planters rolling, plus the high wind and 80-degree days. Things are drying out and dust is flying. It actually caused several accidents with one of the major interstates closed just from such low visibility.
Yeah, and that was pretty widespread. Samuel posted this picture from Ireland, Indiana. He said he started planting the first crop ever for Ebenkamp Farm this week.
How cool.
He said everyone said he couldn't be a first-generation farmer, but he's going to show them. Congratulations.
Yeah, congratulations. Well, Caitlin says they were busy checking corn and cows last week near Louisiana, Missouri. The corn crop looks good, but it's their 2 kids in the field, Mike, that are the cutest. She says her kids are growing up on the farm and she's raising them right. Amen. Thanks for sharing that, Caitlin.
And Dan says, who needs to rely on USDA crop ratings when he can get a Crocs in the field report from his little girl? I wondered where that was going. Here's his 2 daughters on their tractor. By the way, Mackenzie says the crops look good this year.
Well, if you have any pictures or videos that you would like to share, you can do that to the address on the screen. For all of us at U.S. Farm Report, thank you so much for watching. I'm Tyne Morgan. Be sure to join us again right here next week as we work to build on our tradition. Have a great weekend, everyone.
U.S. Farm Report, America's longest-lasting news program for farmers, is powered by Ram Trucks, America's longest-lasting pickups. U.S. Farm Report is produced and distributed by Farm Journal Broadcast.